So the market has seen incredible moves in the first month of 2025 so far. We've seen the S&P 500 go as low as 5,700 to a high of 6,100. Now we're constantly seeing these upward battles between the bulls and the bears, but this volatility is definitely a positive for option traders. It gives us a opportunity to play both sides and take advantage of these large swings that you won't normally get in a slow-paced moving market. Now, besides all this immense volatility has made it difficult for a lot of traders to navigate through the inconsistencies of the market. Now, in today's trading session, we're going to be talking about what we've been doing so far this month here, how we've been able to navigate. We're going to be talking about what we did today in order to predict how we've seen the market go overall. And we're going to be sharing with you guys about a little bit of our prediction. If you guys remember, I actually mentioned that the market would see an intraday move, a major bounce from the lows all the way to around 60.60. This move that we called out live and also made a prediction on was a significant move that caught a lot of eyeballs, and now we're going to see if we can do it again consistently. If you guys been following our Twitter and X page, we've been calling the up and the down moves significantly over time. We're also going to be talking about the significant risks that are presented in the marketplace based on the upcoming earnings and the FOMC interest rate announcement. So let's get into it and let's talk about it in great details. So first, starting off, I want to go over what's happening in the Discord at this time. So a lot of the trades that we often call out in the room here are based on pre-announcing. So we started off the day pretty clean here because we basically sold our snow calls for around 100%. This was around 180s. They actually went a lot higher, but I wanted to take profit off the bat moving forward because they hit my target that I always want to sell, which was around 5. I knew that they could go higher. That's why we started to roll into the 185s. So by rolling into the 185s, we got another 120% right there. We managed to take advantage of that full snow play. Now the reason for snow is that we brought this swing yesterday, and it had to do with our model over here. Okay, so basically snow yesterday managed to get through our level 1 bullish, but we knew that around the zone we will see some sort of pullback. It was off by a couple of points. We waited for the pullback, and then we got in where it actually ran all the way to level 2. This is where I sold my calls and then rolled into the 185s, and pretty much we took it all the way to the top, sold it at this particular moment here. Now, snow is going to be impacted by the Microsoft earnings, so that's why we wanted to make sure we took in profits. At first, we were considering to let it go and hold it a little bit longer, but because there's a lot of volatility in the market, we decided to take the profits, which wasn't so bad. Okay, and the first trade that we decided to get into SPX was a pre-announced play. Now, these pre-announced plays I called out on my Twitter, and we definitely got the 60-60 calls at around that $2. We didn't get a fill on our 60-50s at first, but we managed to get on that. The disorder didn't fill, so we got the 60-60s instead. And the reason for the 60-60 has to do with the fact that it was within our model range. We've seen level 1 bullish first at 60.55. These are daily premiums, and we noticed that the 60-60 call is what I called out beginning of the day. So as you guys can see right over here, this prediction was yesterday's time-stamped that we said SPX would basically hit 60-60, and that strike was convenient for us because, as you guys can see, the whole reason for the rationale is that our level 3 bearish held, and this was a strong reversal zone. So this is why we got bullish yesterday, and we noticed that the premium writers wanted to start selling puts, which caused this spike all the way to this level 1 bearish. So you guys can see here, assuming that there's no negative news, This is a bounce off the level 3 bearish 59.78, which held to level 1 bearish support. So we basically called out that major relief bounce, and that's how we pretty much chose that strike and managed to play it. So that was a nice SPX play that we took 40%. It actually went a lot higher, but we wanted to scalp it. Then we called another entry on that SPX, and that filled at our 3.5. So we pre-announced that, and we took 70% on that. And then we took a end of the day put lotto, which we saw a little bit of a dump, but that was a very small play for around $300, and we took multiple swings. So if we go into our tracker at this time here, so let's see right over here. So this is our tracker where I basically share my overall track record in terms of how many trades hit my my initial standard 50% target. You can see right over here that, you know, we call out a bunch of plays. We sold our NVDA 130 calls, so we had NVDA as well. That was a leap that I decided to sell because I wanted to get out of that play since more news broke about Chinese AI, Baba as well. So, and we took profit of this snow already for 100%, and we took this snow, so that was another 100%. Two SPX plays over here, and these are all the swings that we're pretty much taking consideration. If you guys notice, is that we got MSTR puts, Baba puts, and NVIDIA puts as well, and I'll be explaining a little bit about that moving forward. So besides all that, from what you see at this time here, you guys can see that the members been banking all week. Okay, so if you go on our profit channel, you can see that the success is all there, and not only is members making profits, but they're making it daily. So that's what we strive to do, is to make sure that everyone's winning consistently, and when we do our surveys, that we have consistent large amount of winners, and not everyone, you know, totally voted, but we got 85% of the room pretty much voted yes, and very few red days, which we always care about in terms of the statistics on how everyone's doing. So besides that, I made a bold prediction once again here, suggesting that we may see some red movement in the market. Okay, now the reason for this here has to do with multiple things. So you guys see that NVIDIA is slightly red here, and I see that NVIDIA can potentially retest 125, maybe even 123, based on where I see that going. Tesla bounced right at my level 1 bearish today, so this was a good opportunity that if you did want to play this for earnings, you can play that support. I don't want to play earnings just yet. I wanted to wait for the outcome of FOMC, but that was a very strong support bounce that we've seen right over here. ARM, basically it did hit my level 2 bearish here, and it did crack down. So I think that because ARM is in this level 2 bearish, you might see some weakness in semiconductors once again here. So we're definitely looking to that. Meta is its premiums were very expensive considering the move all the way up, and you know our top on this is 702, so just be aware of that. We shorted MSTR as well because it bounced right off a level 2 bearish, which confirms downside trend, ran up to this level 1 bearish, which we thought was a good opportunity to short, and now we see that it can, if it fails to hold 320, it can really dive, and that will be a significant play that we're looking as well. Okay, so what I've noticed here as well is that when I was looking at the premiums, I noticed that there was a significant bias towards the downside for tomorrow. I believe we can probably see SPX open at around the 60.28 because they, based on the overall situations in the market, you might see weakness in the techs, and the key risk for tomorrow has to do with ASML earnings before the open here. Okay, if ASML earnings are pretty much not favorable, the semiconductors may really drop here as well. Now, one thing you want to note here is that Taiwan Semiconductors did give strong earnings as well, but the previous ASML earnings was not so good, where they pretty much guided down on their earnings and they've been faced with a lot of issues with the whole political stuff from the Dutch government. Okay, so we want to see if that is impacting their ability. And what ASML matters the most for is basically their orders. So their future orders. If the future orders are not so much, then that can be a big problem for the company itself, and that's pretty much its main impact overall. So from what we see here at NVIDIA, it did really go down way below our initial estimates, and that pretty much had to do with the DeepSeek AI news, where the Chinese company is basically creating a very efficient language AI model that is outpacing OpenAI at a lower cost, and that's the reason why we're seeing issues with NVIDIA, and it had a massive decline here. I think there's potential where it can go to 123 and 120. That's why we decided to get those 120 puts, which did show relative strength as well. So we're going to be keeping an eye on that as well. It's also important to keep an eye on SMCI as well, because SMCI is heading into the month of February, and we still didn't even get an idea when we're going to hear about the 10K filing report. So that's going to be a key thing here. With tomorrow's interest rate announcement that's going to happen, it's expected that rates remain unchanged. But the key thing to remember here is that the Trump administration has been pretty open, mentioning that they want lower rates and they want a surging of economy, which is going to be a kind of a clash, because as you guys recall, Powell mentioned before that he's independent and not looking to work alongside the president's needs here. So that's going to be a key issue, what we want to listen to on Powell's speech. See if he, pretty much it becomes dovish as a result and plays into Trump's tune. If he doesn't, then that can really cause a negative sentiment in the overall market, and you can see more potential downside. You want to remember that tomorrow after close, we have Microsoft earnings. We have Microsoft earnings, we have Tesla earnings, we have Meta earnings, IBM, LRCX, ServiceNow, and this is going to be a major impact in the market. Okay, we're seeing very expensive premiums, and you want to make sure that you are aware that anything you decide to trade is purely going to be based off the news, and you want to make sure you manage your risk, because at the end of the day, doing all my trade logging, all of that, I know how much I'm left with throughout the entirety of the month after I'm in all my positions. And based on our tracker over here, we've been basically seeing that my success rate for trades that are hitting minimum 50% has been 80%. So if you guys are having issues trading and finding some level of consistency, there's a way where you can do that, right? The first thing is that you need to build a solid foundation of profits. And when you build a solid foundation of profits, you do that by consistently selling between 30 to 50%. And once you do that and you size it accordingly, then you're able to pretty much navigate the market throughout. You set a weekly budget, and with that budget, you can effectively decide on how to size your trades accordingly and so forth. Because the key thing to remember here is that how you manage your account is going to dictate what you're going to do with your next few trades. I mentioned in the room that we took the snow play, and for the people that didn't play the initial play on the roll up, because we chased that 185 call. So the people that have small accounts didn't roll, they just kept the profits on the 180s. But the people that missed out on the play, they waited for a little bit of a pullback, because as soon as they got on the 185s, they went down around 30%, and then they went up 120%. So that's always important to remember when you're trading, is that everyone has different account management goals and objectives, and it's important that you size accordingly so that way you can find your level of comfort. There's people in the room that are trading larger size than me, and that's totally fine. That's because their risk tolerance is higher than mine. I like to trade at between 10 to 20 contracts. That's just personally me, even though I could do a lot more. But overall, that's where my bread and butter is. That's the point where I know I'm willing to let my plan work out at that specific amount. Once you get to different levels, because you know, with my account being reset on January the 1st, I pretty much sized everything lower, but we're looking for a consistent level of consistency moving forward. And everyone in the Discord always gets my trade logs, so they know exactly, you know, how consistent we've been doing, because this is all about data, right? Trading is all data driven. You got to see some level of consistency. You got to see what plays you're hitting, what plays you're missing, because this here is going to be your key for improvement moving forward. So I hope this recap was helpful for you guys overall. I am somewhat bearish heading into tomorrow. I think we're gonna have a slightly red open, where we could probably see SPX open between 59.20, 59.30, and if that's the case, then all our puts that we swing is gonna be definitely paying, and I'm looking forward to that. So thanks for tuning in. See you guys in the next one, and like always, let's get that money.